The broadcast is now starting. All attendees are in listen-only mode.
Good evening, everyone. My name is Neil, and welcome to tonight's webinar. What I'd like to do, first of all, is just confirm that everyone can hear me clearly and that you can all see the screen in front of you at the moment. What I'd like to ask you to do, there's a window at the bottom of the GoToWebinar control panel. There are a number of little drop-down menus: audio, webcam, polls, and then the last one is chat. Please make sure that you drop down the chat window and type any of your comments in the chat window or in the questions window. You'll notice that there are two of them. You can actually detach the question window if you want a bit more real estate on your screen. So before we get started, just by way of swift introduction, we're going to be dedicating a little bit of time to both the MT4 ANTS and the eSignal ANTS. As such, we'd like to have as much interaction, keep it as sort of engaging and as interesting as possible. Because it's a little difficult, because of the amount of users we've got everyone else's microphones turned off. It's a little bit difficult sometimes to tell what information we're providing and whether or not we're answering the kind of questions that you have. So please, what we'd like to do is encourage you. We really want you to give us information and come back to us with questions and comments as we go. And while Anthony is busy with his presentation, we're busy managing a side screen where I can make sure that all of your questions are being specifically answered. So it's nice. We're not a huge group. There's only about 10 of us or so far, which means that there should be good interaction. And again, I'd like to invite all of you to be completely open. This is about transferring our knowledge to you and making this experience as meaningful and as enjoyable as possible. So with that in mind, I'd like to ask very quickly, first of all, if you could just in the chat window or in the question window, if as many of you could just indicate to me how many of you are eSignal users and how many of you are MT4 users, so that we get a bit of a sense of who we're speaking to. So if you wouldn't mind just popping into there we go. Richard Harms is MT4, Frank is an MT4, oh, Graham MT4, Tola Colony is MT4, all MT4. And there's two eSignal users from Rod, thank you very much, and Anchor is both. Good. Okay, so we've got probably about a 70%, don't check my maths, a 65-70% majority of MT4 users. So we'll spend a bit of time there, but a nice combination of eSignal users too. Right, so with that in mind, thanks very much, folks. It seems to be working quite well. As I say, keep knocking your questions into the question block, and we'll go from there. And without any further, I'll hand you over to Anthony. Anthony, over to you.
Okay, thanks, Neil. Hi, everyone. Okay, what we're going to do tonight is to show you both platforms, eSignal and MT4. As you can see on the screen at the moment, we've got the eSignal platform showing the three chart setup with the 321 and the ETT trading strategies to view. We'll go through the same process on eSignal and MT4. We'll show you the strategies, and then we'll show you, I'll actually build the charts up from scratch and show you how you do that on each platform. And then if, like Neil said, if you've got any questions, just keep firing them in, and Neil will answer them as we're going along. Okay, so as you can see, we've got the eSignal platform set up for the 321. This is the 4x page, and this is the page template that's actually sitting on the forum at the moment. You see in one of the threads there, I've actually put this entire page template up there, so you can download it. Just open the page in eSignal, drops into the relevant folder, open it in eSignal, and everything's laid out as it is, as you can see before you there. So it just makes it a lot simpler to get up and running with eSignal. Okay, so quick overview of the two strategies. First of all, the 321. The idea is that we look for the direction on the top chart. So as you can see here, it's clearly down. The super guppy and the guppies are trending downwards. The MA crossover is colouring the bars red, and we've got all the red short signals firing. The center chart we use for the confirmation of the direction, and then the lower chart we use for the actual entry of the trades. And typically what we're looking for, if we just scroll back on the top chart, we're looking for areas like this where we get a change in direction. So you can see here what happened is price trended down, and we get the change in direction, and we get the changing of the super guppy here. So if I just click on this section here, it'll take the other two charts to the same point in time, and you can see the cursors on all three charts are moving as I move my mouse on the top chart. So ideally, what we're looking for is a pullback into the guppy. If we look on the bottom chart at this point in time, where the top chart goes red, so if we look on the bottom chart, we'd be looking for an entry. However, if I just scroll that back, you can see, and just time the scaling on that, at the point where the top chart goes red, you can see just how far this has trended down on the bottom chart. So we wouldn't really be looking to get into a trade at short at this point because of this such a long down move, a steady down move on this bottom chart. So back to the top chart at this point, we'd be looking for this retracement back here, because the basis of what we're looking for is change of direction, retracement, and continuation. And whilst this retraces here, it goes sideways for quite some time. But if I just click onto that point, we'll bring all the other charts in line, and you can see how the middle and the bottom don't agree at this point. A bit further along, it starts to agree, but you can just see just how choppy and sideways this center chart is in line with this. The bias is short, so we're only looking to get into the market short. But you can see how everything's just too choppy in this area until we get onto this day where it obviously clearly goes. But if we can bring all the charts in line at this point, and you can start to see that it is starting to settle down, and ultimately it goes in the direction of that top chart, but not before this wild swing up. Now, even if we'd have got into this here, anywhere along here, we might have lost a bit of money on that particular push up. Now, this looking at the time of this would be 10:30 UK time, so it may well have been a news item that pushed this up, maybe a European news item that helped move this up before a collapse, and then it just kept trending down all day. But you can see how everything was in line with this top chart. The bias was down on the top chart, and eventually it goes. So we'd stay with the direction. We're looking again on the top chart for this to pull back into the super guppy. Let's click the chart at that point. As close to the super guppy as it gets, it then starts to fall away, and we can see then that the center chart comes in line again. We get this lovely crossing, pull back, and at this point in time on the lower chart, this is where we're looking for our entries. Price pulls back into the zone. Lots of ants firing inside the zone. Perfect opportunity to take our trade at this point, and down it comes, and that's 112 pips moved down. So that's a sort of brief overview of the 321. Just very quickly, we can use the same page for the ETT, because we've got the overbought oversold levels on the top chart, and with the ETT we only use the top and the bottom chart. So what we're looking for here is for price to come below the ETT overbought in this case the oversold level. If I click on the chart there, it brings the charts in line. Now we're only looking for the trade entry now straight to the bottom chart, because we're trading against the trend on this one, and we're looking to trade this back into the super guppy, into the base of the super guppy on the top chart. So we're looking for our long entry then on the bottom chart, and that you can see we get the clear change in direction, lots of signals inside the zone, beautiful looking guppies here, absolutely perfect. Take your trade anywhere in there, and trade it back up to the super guppy, the base of the super guppy on the on the top chart. I mean, you see just at that peak there is a 63 pip move, and it keeps going. If I just drag this, and again, look, with lots of lovely looking signals in here. Guppy's looking absolutely perfect. You can take any of these in here, and that's a 72 pip move up there. And you wouldn't really want to be taking this trade beyond this, the base of the Super Guppy on the top chart, because the trend is down. So we know that it's got a high probability of trending or retracing back into the Super Guppy close to the 300 period moving average, which is the lighter orange one, and that's where we'd look to take our profits on that. And then we'd be back to looking for a short in line with the 321, and that's what we get here. Oops. Okay, so that's a quick overview of the two strategies. What I'll do now quickly is I'll actually build that page of the three charts quickly. So I'll create a new page. I'll create a chart. In fact, I'll create three charts. I'll just quickly remove all of the studies on each chart, and then we'll build it up from scratch. So now we want to lay the charts out horizontally. So if I just grab the title bar to one of the charts, and you can see as I've dragged that chart, the screen goes blue. That blue shaded area is where that chart is going to be placed when I let go of my mouse. I'll let go. You can see that chart is now across the top, and I'll do the same with this bottom chart, and we want it across the entire screen. So if I let go there, I just grab that one to make the there we go. So the spacing is correct. So the top chart is the 10 pip chart, which is it's currently set at 10 pip. We need to set the center one at 5 pip, and then the bottom one at 2. So we've got our 3-2-1 strategy as it's described in the guide. And then now we need to add the study. So right click, insert study, go to add-on studies, find our folder. And first of all, I'll add the Super Guppy, shows the trend. Then I'll add the MA crossover to colour the bars based on the Super Guppy and to give us that early warning of potential change in direction. And then I'll add the ANTS. And finally, I'll add the zone. And I'll set this zone up so that it's 100 pips either side of the 300. Just wait for that to calculate. And then I'll just change the colouring to my personal favourite colouring and style, so it's nice and clear. Oops. There we go. Okay, so we got the top chart created. Now, if you want to save that template, you just right-click, come down to Style Templates, Save Style Template As, and we'll call that 321 Top. Okay, so we don't want to set up the center chart now. We get the same process. Add the Super Guppy. Oops, click on the chart first. Super Guppy. MA crossover. And ANTS. Now we don't need the zone on this particular chart. I mean, in fact, we don't really need the ANTS. We just want this one to confirm the direction. And then again, the bottom one, Super Guppy, the crossover, and the ANTS. Now, with this being a 2-pip chart, I've actually got 40 days of data loaded on this chart. So I'll just very quickly change that to 20 days so that it loads the data quickly, far quicker than the 40 days, because obviously there's a lot of mathematical calculations going on, and we don't really need to see 40 days worth of data right now. Okay, and then we'll add the zone on this one, and we'll set that at 10 pips. Okay, so center chart, I'll then create my template, save as 321 center, and the lower chart, save the template 321 bottom. And that's the 321 and ETT strategy all on one page in eSignal. So we've done that in eSignal. I'll go over to MT4 now, and we'll go through the same process on MT4. Oops, wrong one. There we go. So you can see I've actually got this set up already, but I'll close these charts down and take you through the entire process again. Okay, so I mean, as you can see, it's the same chart as we had on that particular page, pound Australian. So this is, just flick back to eSignal. So we've got pound Australian on eSignal and pound Australian on MT4. So exactly the same. I've got a 10 pip range bar chart on the top, 5 pip on the center, and 2 pip on the bottom. Now it's a bit more fiddly on MT4 because MT4, as you know, doesn't have range bars as standard. So we have to create offline charts, and we provide you with the range bar EA to create the range bar charts. So I'll just close these windows down, close the 1 minute charts, which are down here, and we'll start afresh. Okay, so first of all, drag a chart onto the create a chart on MT4. As you probably know, MT4, when you initially create a chart, it defaults to 1 hour. So the first thing you need to do is change to 1 minute. Once you've changed it to 1 minute, we can then drag the range bar EA onto the chart. This will bring up the dialog box with the settings. So we want to create a 10 pip initially. So if I put 10 in the box there. Now time frame, because we're using offline charts, we're creating range bar charts, we still have to give it a time frame. But so we can't use any of the standard time frames like 1 minute, 5 minute, 50 minute, 30 minute, etc. We can't use any of those because those are already taken. So we have to use non-standard time frame settings. So if I just choose a number that isn't used in those standard settings, in this instance 9. Now maximum bars, we want as much data to come in on these range bars as possible. The default on this at the moment is 10,000. If we actually add a 0 onto the end of that, that'll help bring in far more data onto your range bar charts. In the next release, I'll get that changed, that standard, the default there changed to 100,000, so you don't have to do that bit. So once you fill in those settings, press OK. If you watch in the top left of the chart, we've got to wait now until it says that it's the range bar has started. It takes a few seconds to calculate and generate the all the bars. There we go. ANTS range bar R1 started. So now we can actually go to the file menu, open offline, find our chart, pound Australian, M9, select and open. And there we have our 10 pip range bar chart. At this point, we can actually minimize the 1 minute chart. We don't need to use the 1 minute chart anymore, but we still need it to be running because the range bar chart takes its data feed from the 1 minute chart. So we've got to keep it running, but we don't need to see it anymore. So we can just minimize that down here. And we're left with our 10 pip range bar chart. So again, what we'll do, we'll build the chart up. So we'll add the super guppy, the MA crossover to give us the colored bars, and the ANTS. Okay, so you can see we've got plenty of data now on a 10 pip range bar chart. Next, we'll now create the 5-pip range bar chart. So what we need to do is, again, create another 1-minute chart. So it defaults to 1 hour. It has to be a 1-minute chart to run the EA. Drag the range bar EA onto the chart. We'll set that at 5 pips, and we'll give it a time frame number 4. And again, we'll add the 0 to the end of there. You can see it's come up with the range bar started. So we can go to File, Open Offline Chart, find the M4, Pound Australian M4, open, and there's our 5-pip range bar chart. Again, we can go to the 1-minute chart and minimize that down because we don't need that anymore. I'll just go back to this and apply the ANTS templates that I'd built previously to get rid of these this background grid. And again, I'll apply that there. So template, ANTS. Okay, so now we've got a 10-pip and a 5-pip. Just one more. 1 hour, change it to 1 minute. Add the range bars. Change that to 2. Time frame 2. And add the 0. Charles just asked, do you need to save the offline charts before they can be opened? No, you don't. You don't need to save them. They will just stay on your screen. Each time you close down MT4 and reopen, they'll all still be there, and they'll repopulate as long as the market is open. Okay, so there's our 1-minute chart. We'll drop that down and File, Open Offline, M2, and there's the 2-pip chart. Apply the template. There we go. So now we just need to lay the charts out. So if we tile them horizontally, for some reason MT4 then opens one of the 1-minute charts and puts it at the top, which is a bit annoying. We just need to get rid of that and expand these and just arrange the charts. Okay, something like that. And then we have the charts. We just need to add the zone onto this top chart for the overbought and oversold level. So back to the navigator, drag the zone, and we want to set that at 100. We'll set that as dotted, and I'll just choose the color.
Actually, Frank is just asking if we can change the color in our templates. He feels that he can't.
The colors of of which indicator, Frank? Of the actual ANTS okay. I actually don't think you can. There are the colors in there in the settings for it, but I did have this trouble myself actually, where I tried to change the colors and it wasn't changing the colors. It should do. It is an issue that we will raise with the programmer or programmers, because there's a few of them. And we'll get that fixed as soon as possible, so you can change the colours. We will get that addressed shortly. So we've got our overbought sold levels on the top, and then we just need to add our zone on the bottom one, 10 pips, and that's okay. And there we have our 321 and ETT chart set up in MT4. Okay, any questions we've not answered there?
Asking, just what color number 3 in ANTS is. Frank, I'm not sure what the question means. What color number 3 in ANTS?
Oh, see, yes, I know what he means. In the ANTS dialog box, we are in the colors. Sorry, I'm on the wrong setting. There we go. No. Indicator list. ANTS. Edit. Color number 3. I have absolutely no idea, I'm afraid. I don't know why that color is there because we've only got buy or sell colors. So I'm actually not sure why we've got a third color there, because it won't display anywhere in the ANTS. It will literally be a buy or a sell. So absolutely no idea, I'm afraid. I don't know why the programmers put it in there. I will ask the question, and we'll get that removed because it shouldn't be there. Oh, one thing I did forget to say on when we built the template on the eSignal page, you can see here on this top chart. In fact, I'll maximize this top chart. In fact, maximizing actually makes it clearer. You can see on this top chart where you can see that there are ANTS underneath the super guppy. They're obscured by the super guppy. For those eSignal users that have experienced this, what you need to do is just bring the sorry, there. So with them obscured, just bring the settings dialog box. So right click your chart, edit chart, brings this dialog box up, and you can see the order in which the indicators have been placed on the chart, starting at the top and working its way down. So if we want to bring the ANTS in front of the super guppy, we just click on the ANTS line there, and we just lift it up and move it above these other indicators, and you'll now see that the ANTS are nice and clear. They're sitting on top of they're in front of the super guppy lines. In the same way, you can see down here, we've got this zone, and it's going behind the super guppy here, as you can see. So if I just bring up the dialog box, that's because the zone was the last thing I added, and therefore it's behind everything else. But if I grab it and lift it to the top, you can see now it's clear. We'll just get rid of that center EMA because we don't need that center one. And now you can see that the zone is sitting on top of the chart at the super guppy, so it's nice and clear. So that was just the other thing I wanted to mention on eSignal.
We've probably reached we're approaching the halfway mark in terms of how much time we want to take from you folks this evening. What we've now done is established a bit of an overview on building the charts, both at eSignal and MT4. What I'd like to do now is, in keeping it as interactive as possible, what I'd like to do is try to answer some questions that users might be having in terms of what they've experienced so far. So if there's something that you see on the chart that doesn't make sense, or something that was moved over perhaps a little bit quickly, or something you'd like a little bit more detail on, now is where I think we'll probably try to move it into a bit more of a feedback type session.
Q&A.
So again, yep, Q&A, that's what I was after. Thanks, Ant.
Yeah.
If you could pop your questions into the question panel, and we can start drilling into them from there, folks. And you can just make a message that if you want it to be looked at on the MT4 chart or on the eSignal charts, please. the thing is, the concern is always it's either such a brilliant presentation that we've answered everyone's questions, or that we've completely lost everyone in our audience.
And they've all fallen asleep.
I hope it's option one. I see there are a couple of folks who've joined us since the presentation has started. A couple of friends from all over the world. Please, by all means, the floor is yours. Right. The question is, how do you get your, Colin's question first of all is, how do you get your triggers? By triggers, Colin, first of all, you could just elaborate whether you want us to look at the eSignal screen or the MT4 screen.
Okay, Colin, so I assume you mean where do I start looking for a trade? Is that what you mean? Yeah, okay. I'll flick back to eSignal because that's the platform I use on a daily basis. It's a much more flexible application than MT4. Okay, so where do I look for my trades? I start on this top chart. This is the chart that I'm trading in effect, because this is my direction. So I'm purely looking for, first of all, a change in direction, or this type of scenario where we've got this retracement back into the super guppy on this top chart. So it's this area that I'm looking for. So once price hits the 300 period moving average on the super guppy, or gets close to it, this is where I want to start looking for my trades. So if I just click on that area there, now you can see where price on the top chart hits the 300 period moving average, and on the bottom, the center and the bottom chart, the charts don't agree with taking a short just yet. So I stay with this, and I'm looking then for the confirmation on the other two charts. So at this point in time, we then get the confirmation on the center chart, and we're then looking for the entry on the lower chart. Now, unfortunately, at this we don't actually get a retracement into the zone on the bottom chart. However, we're in such a strong downtrend on this move. This has been moving down for days. In fact, this is like into the third week. Then I'm more likely to take a trade at this point where we've got retracement here, and we can clearly see that on the middle chart that whilst it isn't red, we can see the turn. We've got a lower high here. We've got lower lows forming. We've now got price breaking down below the 300 period on the super guppy, and we've got it goes yellow at this point. So anywhere in this area here, I'd be happy to take a short based on just how strong this overall down move is. So that's how I would look for a trade on an existing downtrend. I'd be looking for this top chart to retrace into the super guppy first, and then start to continue its move down, confirmed with this type of setup, and taking any of these shorts down here on the bottom chart. But my favorite setup is where you get this scenario, where it's been we've got this change of color. This is what I'm looking for. I'm looking for this change of color and retracement in, and we can go back and find another one like this. This is great. This sharp move down, pull back. That's what I'm looking for there. So we've had a sharp move down, a pull back, a continuation on the top chart. The top chart's now gone red at this point. We've got perfect looking guppies on the center chart, and we've got lots of ants firing inside the zone on the bottom chart, our entry chart, and we'd be taking our trade in here, and we get a fast move down there, 88 pips. Take some profit out of that. All depends on how you manage your trades as to whether you go for fixed take profit, or you could use this traders ATRs we can see on the center chart. The center chart actually is quite good for managing trades if you like a trailing stop with the trader's ATR, because it's not too tight so that you're going to get stopped out of the market quickly, but it's not too far away where it suffers a big retracement. And you can see on this, if we'd have taken the trade there, our trader's ATR would have taken us out there with 45, 46 pips profit. But that's the type of thing I'm looking for.
Anthony, a few more questions coming through. Actually, a great question from Richard. The question in terms of because we use different speed settings on the Super Guppy in terms of the original Guppy GMMA formulas and applying them now to range bar charts. The question is, have we noticed any changes in the interpretation of the Guppy's original GMMA? You might want to comment on the Guppy's experience of our new sets of speeds.
Okay. When we first approached Darryl Guppy, actually showing them the work that we'd done, Darryl was absolutely amazed at how well our set of multiple moving averages, how well they worked on range bars. Now, the reason I use range bars is because I'm not interested in time. I'm only interested in where price has gone, and I don't care how long price has taken to get from A to B. I only want to see where price has gone, and range bars gives me a perfect footprint of where price has gone, taking time completely out of the equation. Now, why that's important, I believe, when you're plotting moving averages, a moving average is an average of price, and therefore we really need to take price out of the equation. So the moving average then gives a moving average on a range bar chart actually gives us a more accurate average to work with, and therefore identifies trend in a much smoother way than a time-based chart. Now, just because we're using different settings, basically the answer is no. We still stick to the traditional Guppy principles of we're looking for this change in direction, pullback, continuation. If we get the bubble type scenario, which is really what we're looking for here in the ETT, and it was actually Ryan Guppy that documented the ETT strategy based basically on his father's work of seeing this bubble occur in the or balloon, sorry, as Darryl calls it, in the multiple moving averages. So where we've got this sharp price move down, you can see on the top chart, and it goes into the overbought, into the oversold area. You can see this widening of the Guppies, quite dramatic move rather than a smooth trend, and that's where you can take advantage of then an ETT trade. You can see here where we've got a perfect ETT trade formed after the push into the oversold level. We've got the longs firing here and a great move up.
Turlo, I hope I've described your name right. Turlo, your question is in terms of the setting up on the MT4. We handled it at the beginning of our presentation. My suggestion is what we'll do is we'll make the presentation available on the website as soon as possible, where you can see a very good description, a very good display of how to do those. So I hope we're able to answer your question. If you don't mind, just going back to the webinar when we make it available. Then two great questions, in fact, one from Colin and one from Frank. Anthony, if you could just spend a moment on them. The questions are, how do we decide on which FX pair to trade? And then the question in terms of using the ADR line. So perhaps the combination of the range and ADR and our selection of our top fives.
Yeah.
In terms of answering those questions. And then Charles, I'll come back to your question in a moment.
Okay, yeah. So the question then, how do I decide which FX pair to trade? Right now, I'm actually not trading FX because of the average daily range is very, very low. I trade on the E-minis, and I'll quickly show you one of the E-mini charts in a second. But in terms of FX, how do I decide which ones to trade? I do use the average daily range, which is why we included an average daily range indicator in the suite. And you notice there are two. There's one for the charts and there's one for the watch list. In my watch list over here on the left-hand side of the screen, you can see we've got these two columns. The first is the average daily range indicator set to 1 day. So this is telling me how far the previous day moved. In fact, it's not actually showing me the correct data at the moment. So I will need to reload that data because that's not showing me the correct data, unfortunately. The second column is the average daily range of the last 5 days, and this is the column that I'm really interested in. So if I just sort that column into order, and we can see that the top 2 moving pairs at the moment over the last 5 days are pound New Zealand and pound CAD. Sorry, I've just clicked on, so it's going to reload these charts. So you can see that the top 2, 117 and 102 pips as an average daily range. Now, for me, that's too low. I really need at least 100 pips to consider trading foreign exchange. Anything less, I just completely forget about. So right now, I'm actually not looking at Forex until there are a lot more of these average daily ranges above 100. Once these are above 100, I'd like to see at least sort of 6 or 7 of these above 100, and therefore we'll be getting sort of 100 to 150 average daily range in the top moving Forex pairs, and those then are the pairs that I'd look to trade. So that's how I select which FX pairs to trade. And in terms of average daily range on the charts, I'll actually just switch to the YM, which is this is the Dow E-mini, and I can show you how I use the average daily range on this particular setup. So what we're looking at here is the YM. It's the 3-2-1 strategy. I've just got my charts laid out slightly different on the E-minis. This is how I like the just my personal preference as to how I like the charts laid out.
Just please need to, on your bottom chart, if you can just darken, draw your ADR lines and perhaps increase the font on your labels, please. They're difficult to see. No,
it's okay. They're not on the bottom chart. They're pivots. I've actually got them on this top chart to show everybody. So okay. So yeah. So this layout is just the 3-2-1. So this top left chart is the direction chart. The top right chart is the confirmer chart, and then the bottom chart is my trade entry chart. So exactly the same, 3-2-1, and this is actually where the 3-2-1 term came from, because this particular chart, the YM, my direction chart is a 3-pip range bar, the confirmer chart is the 2-pip, and the bottom chart is the 1-pip. So 3-2-1, and that's how we came up with that naming strategy, naming convention for this particular strategy. So exactly the same. We're looking for the change in direction here. We can see this change in direction, and this is today. This is earlier today, and this is perfect, absolutely perfect. It doesn't get any better than this one. You can see we've been in a downtrend. We get this warning that we're potentially going to change direction. It moves up, it goes green, it pulls back into the super guppy. If I click in this point, you can see my cursors on the confirmer chart on the right, and also on the entry chart at the bottom, and we get an ant firing on the bottom chart inside the zone here, and this has moved up a total so far of 49 points. So an absolute textbook trade. That is a perfect trade. So onto the point about average daily range and the levels on the chart. Research has shown, and this is not our research, this is research that has been done in the trading industry over the years, but research has shown that a chart will reach 75% of its average daily range 85% of the time, and we've documented this in our strategy guide as well. So in this particular instance, if we'd have taken this trade here, in fact we could probably taken the trade there. We'd got the changing color on the direction chart there. The guppy is not perfect at this point, much better at this point, but if you'd have taken a trade, any of these trades here, so where's that first signal there, so we're at this level at 17.045, 045, 046, which is around here. So if I had have taken my trade at that point and targeted the 75%, that's only a 25 pip a 25 pip gain. It's not quite a 2-to-1 reward to risk that I would like. On this particular chart, I'd be looking at a 15 pip stop loss. So in that instance, it wouldn't be a 2-to-1 reward to risk, but there's room up to the 100% at 47. That's then sort of just over 3-to-1 reward to risk. So I'm almost at 2-to-1 there, 3-to-1 at this point. I'd be looking to take 30 pips, which would be there. But that's how I would use the average daily range as a target profit. I'd be looking to see if I can get a 2-to-1 reward to risk at 75%. In this particular instance, it didn't actually show a 2-to-1 reward to risk, and I may not have used. I may not have even taken the trade, but it was a textbook trade at this point. That was absolutely a perfect looking trade. So I would have looked to try and get 30 pips out of that move, even though it was slightly above the 75% level. And you can see it's gone slightly above the 100% level in this instance. I mean, earlier in the day, you can see, so this is 8 o'clock in the morning where I get to my desk. Again, perfect looking guppy. The top the top left chart, absolutely perfect. We've had this move down, perfect looking guppies. We've got confirmation on the top right chart, and we've got entries firing inside the zone. Again, perfect looking guppies. Like I said, textbook day today on the Dow, or on the YM, should I say. And a move down to a total of 67 pips. Now again, if we have a look at the ADRs, now unfortunately these ADRs will have shifted slightly because they're calculated from the current day's high and low. So only slightly different, but the 75% level there, if we'd have taken our trade up here, that would have been roughly a 50 point move to a 15 point take profit. So that's a 3-to-1 reward to risk. Perfect trade.
Anthony, if we could move back to MT4 for a moment. Two questions, one from Charles and one from Richard. Charles' first one is, the question is, how many bars are needed in options chart, max bars in history, and max bars in charts? I'm guessing that's a setting question. And then okay. Richard's question is, how are we determining our stop loss points? Perhaps explain around the zone a bit for MT4. Thanks.
Oh, right. Okay. Yes. Yeah. Yes. That's a good question. Good point. Okay. First of all, how many bars need in options in charts, max bars in history. Okay, that's an MT4 setting. So if we go to Tools, Options, and click on Charts, these are the default settings from the installation of MT4, max bars history. This really only applies to time-based charts. Yes, we're using a 1 minute time-based chart to feed our range bar charts, so you do need a reasonable amount of bars in the chart. But these default settings will be fine. You don't need to increase these beyond. This one's set at 65,000 bars in the chart. Maximum bars in history 512,000. So you won't really need to increase these, because the range bars are created from the 1 minute chart, and with your range bar charts, you'll generally only get about a month's worth of bars anyway. Yeah, maybe slightly more, depending on your broker as to how much data is fed through. But you shouldn't need to change these settings. And the next question was from Richard, wasn't it? How are you determining the stop loss point? Okay, taking the trade inside the zone. Let's just take this one here. If I'm taking one of these short positions anywhere inside the zone here, so if I take this one, I'd be looking to get out if price was printing the wrong side of the zone. So you can see up here, this is at around about 15 pips to that point. I've got this zone. This zone is actually set at 10 pips either side of the 300 period moving average. So ideally, you're looking to get into your trade as close to the 300 period moving average as possible. So if you've got short ANTS firing, there's nothing really to stop you hitting your trade as it comes off the 300 period moving average. You really want to try and capture it as close to the 300 as possible, and therefore your stop loss would just be the opposite side of the zone. So 15 pips, say to there, and this particular move almost 40 pips. So, but certainly you'd have got on a fixed take profit of a 2-to-1, you'd have got your reward to risk out of that move there. So that's what basically how I use the zone. I use it to enter my trades, and my stop loss just the other side of the zone.
The question was much earlier. Originally, let me just see who asked the question. Richard was actually asking the question as well about applying the filters. In this instance, by applying the zone filter to the ANTS, it will actually only allow ANTS to fire that are within that zone that you've set, to sort of draw your attention only to the ANTS that actually satisfy your own trading personality. We're very often tempted to what was actually defined. Began to be called the cheeky trader, because I was always taking trades slightly outside the zone because I was impatient about waiting to get there, and my colleagues, I spent a lot of time laughing at me because I would always be impatient. And I find by applying a filter, it disciplines you to actually operate within the zone. And of course the obvious benefit of operating within the zone is you get nice and close to the 300 EMA, so your moves are nice and explosive, so your profits are that much better, your take profits. And of course, if it happens to be a wrong signal, which happens from time to time, you really don't get burnt that badly. So it's a lot more encouraging, lot safer way to trade.
Yeah, okay, I can just quickly show you that. So if I edit the settings, go to the indicator list, edit the settings of the ANTS, and we'll turn the zone filter on. And you'll notice when I press OK, that I'll close the dialog box there, that all of the ANTS that are firing outside of the zone disappear. Yeah, so, and we did that with that reason in mind, so that we could isolate the ANTS that are firing inside the zone to give you the highest probability areas to enter your trade with the least amount of risk. And as Neil said, the cheeky trades that he used to take were down here and invariably here, and therefore had to suffer these type of pullbacks.
The amount of pain and anxiety you experience as you're waiting for the trade then to mature, as it should, as we know it does, is just not worth it. So yeah. The obvious benefit of trading within the zone is self-evident.
And you can see
the next question. Sorry,
I was just going to point this out, and you can see just how great these signals are. So you've got these signals firing here, get this big move up, the retracement back in, and then these lovely signals here for that nice big push up there. Even these ones as the tail end of the trend before the change in direction. So the filter is a very good filter. I use the filtered signals. I only trade inside the zone.
Richard, your question in terms of other than operating within the zone, other factors we've discovered that impact on our effectively ANTS are as an entry signal. The easy answer to that is what we've typically found is on using, for example, the 3-2-1 pattern, the first change in direction, so the first retracement after a change in color on the MA crossover, so the very first on the top chart, the very first change in color that you get on the actual the range bars changing. The first movement after the change tends to be the most explosive and the most predictable. Now, our testing goes back about 4,000 days that we've tested ourselves, having traded this for quite a while ourselves, obviously, in addition, and we're finding that your predictive accuracy rises to in the 80% if you operate in the first movement after the massive change in direction. So that, in terms of a high probability trading, which is ultimately what we want looking for, we want to create a perfect storm, a set of conditions that operate in harmony, the ones that are most likely to give you the biggest and best predictability in terms of outcomes are the ones after the change in color and direction. What you'll find is then retracement trading, so in other words, waiting for it to fall and rise, because as you know, it's never linear, it's never in a straight line. Those tend to be on a diminishing return, because we know on every retracement, if you take a trade on, say, a 2-to-1 or a 3-to-1 reward to risk, you will perhaps have 4 winners in a row, but you know that there's going to be a loser at the end of it. So it's a diminishing return. So to answer your question as best I can, the first change in the color direction, in addition to operating within the zone, is always, when we're training new people to use the system, we discourage them from looking anywhere beyond the first color change. So in other words, be disciplined to operate on the first color change, and that's going to give you your best results to start with. I hope that answers your question.
Yeah, so just to sort of repeat that, it's showing you that on the chart. It's this color change, the pullback. So it's the first pullback after the change in direction, and that's what I consider to be the highest probability trade. Which is why on this particular one, I felt that the trade from that point on was such a high probability trade, that even though the 75% at that level wouldn't quite give me a 2-to-1 reward to risk, I would have taken that trade because that's the money. If this is a true change in direction, I will get my reward on this particular trade. I certainly won't take it here because we're too close to the 100%. You know, I wouldn't take that signal there. As nice as that guppy looks, I wouldn't take that. Even though, as you can see, it's moved up 20 points, so it's a reasonable gain so far. But I just wouldn't take that because we're above the 75%, whereas this was the first change in direction, the first pullback after the change, and that's what I consider to be the highest probability trade that you can take. Okay,
folks, I think that's about it. We've just clicked exactly just over an hour. We're into our hour and first minute. Frank and Richard will very quickly take your last 2 questions. There may be a change in direction alert would be great in terms of MT4. That's certainly something we could look at. We do have some great alerts in terms of you can program some very clever alerts on eSignal. Unfortunately, some of that functionality is diminished or reduced in MT4, but it's absolutely the sort of thing that we would welcome. If you as users are experiencing that sort of thing where you feel that something like that is important, that's exactly the sort of thing that you want us to be telling us about, and we can include those in our later revisions. We're constantly working to adapt and improve our product to make it that much more of a positive experience for everyone, and profitable. Of course, that's ultimately why we're all here. And then finally, Richard, your question. Are there any of the E-minis that you avoid for any reason? I can answer that for myself. I particularly don't trade the S&P, although Anthony is obsessed with it. So he tends to find that the movements are a lot more predictable by the way that they move, but I guess that's where it comes down to one's personalities to some extent. I can see Anthony about to pop open the ES chart just to prove me wrong. I bet you it's been a great day and you'll laugh at my face because that's how it works. Yeah,
it's my favorite chart because it moves so calmly. The YM is a nice chart in terms of its movement, but it can very quickly go against you. And the not that the move against you is wrong; it's just a pullback. But you don't get the violent swings on the ES as you do on the YM. I showed you the YM today because it's a good chart to show the deep swings, the big moves, and the big pullbacks. But in terms of a chart to trade in as an E-mini, the ES really is a fantastic chart because it's a lot slower. The retracements, the pullbacks against you are not violent, and you see this chart populating now. The ES, the NQ, and the YM are the 3 charts that I watch, and I trade the ES and the NQ. I will trade the YM, but it's not a chart that I would look to trade every day. If it's obvious that we've got fluid movement on the chart, like today was a great day, it was evident right from the off that the guppies on all three charts looked perfect. And if a chart is moving freely, then it tends to move freely for most of the day. Now this is the ES, and look at this. This is just heaven.
Of course, it's going to be the best example possible.
It is. It's just brilliant.
It's a chart that I don't like.
Now, so if we look at this, we've got this change in direction here, the confirmation here, and I would be taking this particular trade somewhere in here. Now, I've only got yellow on this, but on this chart, because on the other two charts, on the NQ and the YM, those, at this point in time, those had already turned. And if you remember, that this was a trade that we looked at on the YM at this particular time. If we've got the overriding confluence of the other two, I'll use that in conjunction with this, because this yellow is rarely wrong. When you get this change in direction, this potential change in direction, it's rarely wrong. It's if you have a look historically through your charts at these points.
Just to avoid confusion, I think in the default settings, the yellow in Anthony's chart is actually grey in the standard settings.
Yes, that's true. So at this point in time, these guppies look perfect on the confirmation chart, and this was just trending beautifully, and therefore this is a perfect trade. Now on this chart, you can see this has moved up to the top 6.4, 6.5 roughly points. Now on the ES, if you know E-minis, the ES moves in quarter point ticks. I'm looking to get 5 points, so therefore 20 ticks out of this trade, and I do that most days on the ES chart. It's a great chart, and there's no drama. You can see from the entry point, it's not a problem. It's a nice chart to trade.
Who doesn't enjoy it?
And look at this.
Drama now and then.
And this the one from first thing this morning, absolutely perfect. We've got the confirmation on all three. Beautiful looking guppies. There's the entry, and it's an 8-point move down. But again, I'm looking to get 5. And I'd have taken my 5 out of that, and that's me done.
Okay, gents, and I think Anthony, we've probably about at our limits in terms of the audience attendance. We've just gone over an hour and 6 minutes. Is there something that you'd like to close on?
Okay, no, I think
didn't mean to cut you off there. I thought you were about to launch into something else.
No. I've shown the perfect trade on the perfect chart.
Oh, well, there we are. End on a high. Okay, folks, if there's anything we can do, Richard, thank you very much for we enjoy the questions. We sit here and we do this every day, so to us a lot of this stuff is self-evident, and I'm reminded we make the mistake often of assuming, making the presumption that what we're showing is self-evident. So the fact that you stop us and ask us and ask for clarity and so on is actually, it's exciting for us. We really enjoy doing it. So at any time, if you have a question, one thing I'd like to challenge you all to do is to ask you to do, just make a note of our email address. We've registered a new email address called support@ANTS.com. That's support for our technical support, where we've got a very clever system that assigns work tickets and activation to individuals, sort of specialists in the question that you're actually asking. And we're really excited about being able to help you guys. If you have a specific question or if there's something that you need, we've got a great system built now to be able to handle questions as they come in. So please don't feel at any point that you're taking any of our trouble. This is what we do. This is what we've done. These are our careers, and this is what we do. This is our lifestyle. So we're hoping to spread and share a little bit about the successes we've enjoyed, and you can perhaps enjoy them too. Ultimately, that's what we're here for.
The other thing I'd like to say on the close actually is that is just to remind everybody that we're actually traders. We didn't build this in mind with it as being a commercial product in mind. We built this to help ourselves, and we trade this day in, day out. I've traded this strategy for several years. This was evolved over the last sort of 7 years, well, more actually. I mean, I started to study Daryl Guppy's work back in 2003. So It's around 2003, 2004, something like that. So, we are first and foremost traders, and it's great to be able to share this with other people, and hopefully you guys are enjoying using the product.
Okay, folks. Well, with that in mind, I think we will close up shop for the evening. It's midnight here in London. I'm not sure. I can see from I recognize some of the names that have joined us tonight. I see we've got from the land of where the sun has just risen not too long ago, and all the way west as well. So it's really, really nice to have everyone who's come and joined us tonight. Thank you for your questions. And again, this webinar will be made available as soon as we can on our website, probably to our YouTube channel. And we'd invite you to go and have a look, and if there's any questions or any revision, we'll look forward to helping you. So again, Anthony, thanks for your time. Ladies and gentlemen, thank you for joining us, and we'll look forward to doing this plenty more. Thanks again.
Thanks, everybody. Bye.